Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, one of our subscribers said, we bought this stuff, gold down here at this 3360 level, and we wrote it for $200 an ounce, and he was wondering why we didn't keep it for the other $200 an ounce. Well, the reason for that is, folks, I was concerned that his tax liability was going to be too much, and so I didn't want him to be burdened with that. That's why I decided to get out, so he didn't have to worry about paying taxes on that last $150 in gold. I hope that makes sense. And if you believe that, you don't have any common sense. Anyway, here's what we had today. Over the last few days, we had another ABCD up here at 3702. We had a high of 3715. All I'm going to do now is when I see something like that happening, because I trade actively, I go down to a smaller time frame and I try to find something that I believe in. As you can see here, the market breaks. What does it do? Is first retracement. You're going to see it right here. Goes right up to the 382. Right here, then it goes all the way down. You notice, see how it makes another low right there? What you have to do is you got to redo it because you got another 382 right there. And what does it do? It misses it by $1. And then on the last one, you can see it came down and went tiny bit above the 382, but not by much. It went above it by about $4, and that's where it's at right now. It's trading right below the 382. Now, whether this is a $50 break, but folks, it broke $70 last week and then went up another $150. So I'm looking at it from a risk parameter standpoint. That's all I'm looking at. Okay, second question. Someone asked me a question about the Hong Kong index, and here's the Hong Kong index. This is a long-term daily, and you can see here that we've had another ABCD completing today. ABCD right at this, just get this out, you'll see the number. See, 26,000. The high today, folks, was 26,027. They closed at 25,398. There's your ABCD pattern right here. Looking at this on the weekly, we're right up against heaven's door right here again, folks. I don't know when it's going to happen. Maybe it's not going to happen, but that's what I'm looking at. There it brings another problem. Someone asked me a question about one of the big stocks in this index, which is Taiwan Semiconductor. And of course, I said I wouldn't be in this stock above 238. And of course, it went from 238 and it's trading at 252 today. So they said to me, boy, you don't really know much about stocks. And I said, you're correct. I know about risk and I wouldn't own it up here. That's all I can tell you. So that's what I'm looking at as I'm watching these things, folks. It's not how much money you make. It's how much money you don't lose. And folks, I've been preaching this for day after, just like I did back in the dot-com bubble and all these others. I can see these because I've seen so many of them, and they've never trapped me yet. This might be the one that does, but I'm ready for it when it does happen, if it does. Anyway, this is what Jeff Hughes posted yesterday on the show that I think is probably the most glaring debacle of where we are right now. We are 3 times higher than the dot-com bubble back here in 2000, 3 times. The NASDAQ gave back 87% into 2009 right down here. That was the bottom. And of course, it had this big move. This is where we are. It made new highs just recently, but this is danger, folks. And it's mainly because of the AI is in this last part of it, of course, has been the AI. But this is what's so dangerous, in my opinion. Of course, opinions are like armpits. Everybody has one and they usually smell. So let's get back about talking some other markets that we've been watching. We had another one here. It looked like it was going to be an absolute home run today, but we didn't quite get filled. That's in the crude oil. Let me get this out of the way here for a second. I think it's right there, if I'm not mistaken. Come on, please be there, crude oil. There it is right here. This is what we were looking for. We wanted it to get just a tiny bit higher today, and we missed it by about 10 pips. Then it went to the 382, and of course it started back down again. Now what we have happening here, and there's a possibility, a good possibility, this could be a significant bottom, because we've had higher bottoms now and we have higher tops. You see how the trend has changed a little bit? So what we want to be watching, if you're going to be trading crude oil like we like to do, find out what these ratios are on the way down. So your first one would be right here. Well, there's your 382 right here. That's the 382 off the whole thing is where it is right now. If that's good, then, well, it's only been down 3 hours and it stopped right at it. It's trading right now 62.82. So if you bought it here at 62.82, you put your stop at 62.52, and you're going to see whether you win or not. I like to have multiple numbers in here. And so what I wanted to do is I wanted to come right to here, 618, down another 50 points, okay, because that'll be right at the 618 of this move right here, and it'll be 786 off of this move right here. And then if you draw that line up like this, you're going to see here, you're going to be looking at a 1, 3, 5 pattern. So that's what I'm waiting for. Put that 786 of this next one in right here, and that would be right there. That's the number, which is 62. Put it in at, let's say 62.30, and that's down 50 pips from where we are right now. This might be it, but I'm betting on this. Let's put it this way. I'm doing a successful risk presentation of where I think it's going to go with that. I don't know where it's going to go, but I'm assuming that's what it is. And we all know what assuming means, don't we? Okay, now let's move on over here and cover a couple other little things like the Treasury bonds. We've been watching bonds very carefully now, because of all the movement that we've had. We've came up, we've hit some major levels up in here, as you can see. We'll do that hourly first, and then we'll show you, because that's the one that made the 382. We went up to this level. You see how these levels are equal? They're not really bouncing off very much. So we look at the daily now in the Treasury bonds, and we've taken out the high from right here. We went up and matched the 61% retracement of this whole move down. We have not taken out the April high as of yet. However, if we look at the Treasury notes, which we do, because it's 6 times the open interest, you're going to see a totally different picture. You bring that up, and you're going to be able to see here, get this over here, move this over, and you can see what it's done to the April. Oh, wait a minute. Did I do that right? Hold on a second. Let me get up to that place right there. Nope, April high. It has not taken out that high of April as of yet. There's where the ABCD came in. You can see there's a 618 where we are in the bonds. The notes are up at the 786. Big difference. See, this is much weaker. The notes, the bonds are much weaker than the notes, because the notes are above the 786 and the bonds aren't. So the one you want to be looking to sell is the bond. It's the weaker of the two. And we're in an area where you don't have to risk very much, because there's your 61% retracement. There's an ABCD on this. It's just a tiny bit higher. And I'm sort of waiting for that, but it's not too far away. If you'll see, that'll take you to 17.29, and so far the high has only been 17.15. Whether this is going to be it or not, I'm not quite sure. Looking at this on a really short-term time frame, yeah, it's probably telling you it did move a little lower. This is where you are right now. So your risk here is rather small for selling it, but I'm just going to wait and see what happens here. So let's take a little break. Paula T. Webb will be our guest at the break, and we'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, now this is the NASDAQ up through today. You can see here we didn't quite take out the highs of yesterday. We came very, very close. As long as we don't take out this high here at 24,000, the cycle that I'm looking at is still valid. We haven't taken it out in the Dow Jones, nor the Russell, nor the S&P has taken it out, of course, but that's the only one of the four that it's been able to do, and it is still acting the strongest. As you can see here today, here's the S&P. As you can see here, there was our move here last night. You see, we went right up to the exact 786. Then we backed off to this level right here. Let's just double check. Looks like it's pretty close to a 382, but I can see right now it's just about exactly 50%. And there it is. Well, almost went to the 50%. Now we're rallying back up to this level. This is the key level up here. We did take that out. If we take it out again, that is going to damage my cycle hypothesis, but it's going to have to be taken out by the NASDAQ, the Russell, and the S&P. All four of them have to do that in order to do it. The reason why is, folks, these stocks are heavily weighted because they're all, you saw that picture that Jeff Hughes where the valuations of these things is unbelievable. Look, Robinhood was trading at $5 just 7 or 8 months ago. Now it's 130 or something like that. I mean, these are monster moves that some of these things have had. So that's why you have to be really careful when you're making a prediction like this. Whether I'm correct or not still remains to be seen, but we'll have to do one thing at a time, and that's what we're trying to do here as we're watching some of these things today. I rely on basically patterns and cycles. I understand a tiny bit of astrology, just enough to get me a little bit dangerous, but it's held together for me for these many years, folks, because I've never found anything better than the Bradley model, and it can be off by 7, 8, 9, 10 days sometimes, and that seems to be it's off 7 days right now. But that doesn't mean it's going to be wrong, because when you come at the end of the month or the end of the quarter, it should be down into January. But if that's the case, but we'll have to do one thing at a time as we're watching these things unfold. Now let's take a look at the wheat market, because I still like the wheat market. I don't believe we're going to stop eating these things that I talk about quite a bit, cookies, pasta, and all this other stuff. Now here's the wheat. Now I'm going to bring it up on a on a daily so you can see where we are. We haven't moved very much, which is good. We're still down in the zone where I still think we could get to this level one more time. The reasoning for that is, look at this. We took out yesterday's high by just a little bit, and it didn't go anywhere. See, it's actually moving lower right now. That tells us that this might still be a valid move to this downside right here at 512. That's where I want to buy it, 512. That's 9 cents from where it is right now, $450. I want to become a farmer down here at 512, just like I did right there. Okay, just like I did right there. I'm going to try to be a farmer right there at 512. Now, sometimes the farming business pays you a lot, sometimes only pays you a little. But the good part is you don't have to lease a tractor, you don't have to lease the land, you don't have to borrow from the bank, you don't have to get insurance, you don't have to plant the seeds, you don't have to pray for rain, you don't have to do any of that stuff. Because if you don't like it, you click that button that says sell and you're out. And that's what we're doing. I'm going to buy wheat right here. I'm going to put it in right here. If I had to do a trade of the year, this is what I would do. I'd buy wheat at 512. Let's put it 512 and a half. Okay? And we're going to sell it at 499.4. So we're going to risk $500. Well, actually, that's $600. We're going to risk $600 on that. We are going to be a farmer at that point. We're going to buy wheat at 512 and a half, sell it at 499 and a half. Folks, wheat hasn't been this cheap in 7 years. And remember, 3 years ago, it was trading at $13.50 a bushel when they were going into the Crimea and all that stuff with Ukraine. They thought the Russians would own all the wheat. Well, they were selling the heck out of it. Anyway, that's what we're watching here in the wheat market. Now, I had a question about soybean oil this morning, so let's get that up and take a quick look at it. This is the December, and it's back to that same area. We're getting ready for another potential buy here in the December soybean oil. Remember, we tried this one here. It worked pretty good. Okay, then we tried this one. This one didn't work very good. And now we've got an ABCD coming in again right here. All right, so we're going to be watching. Remember, this is soybean oil, folks. When you crush the bean, you get 20% of the bean is oil and 80% is meal, which is basically feed and tofu and all that stuff. This is margarine, cooking oil, gasoline, that type of stuff. And there's where we are. You're going to see here, we'll clean this out a little bit so you'll be able to see it a little better. There's what we want to see. Now we have our second best ABCD pattern since right here. Okay, that's the last time we had a good one. All these were just pullbacks. This was an ABCD right there. Led to that big move right here. So what do we have now? We've got another one coming in right now. Let's just draw this in so everybody can take a quick look at it. There's your AB leg right here. Okay, there's your CD leg coming in right here. Ooh, shut the front door. And what do we have coming up here? We're right over a lunar eclipse 2 days ago. And so that might be close enough. For 50-50, we're at 50-65 right now. That's the AB. No, that's not correct. That is not drawn correctly. Let's just do this the right way. There's your AB leg. See, it has to catch that exact low. Otherwise, you don't get it. Yeah, see, there it is. 50.11 is the number we're looking at. That's down another $300 from where we are right now. So let's match this with one of these numbers back here. It was our big low way back here in January was a big low. So let's see if that correction matches up with what we're looking at right here. You don't have to have a weatherman to do oh my goodness, shut the front door and raise the rent. We're right there right now on a 382 right now at 50.55 right there, and we're looking at the ABCD at 50.51. I have no alternative but to buy it now. I have to do that. That's 382 right off of that move. Oh, way back here. And, this is going to put your stop right below here. So what's the low has been 55, and we're trading at 63 right now. So I'm going to buy it right here. It's at 50.63. Okay. Now I'm going to be a farmer, but so how much am I going to have to risk? So I'm only going to risk about $400. So if I buy it at 50.62, I got to put my stop down here at 49.60 for 49.80. 49.80 is where I'm going to put my stop. So I'll put a stop here at 49.80. Okay, that means if I'm wrong, I'm going to lose $400. Okay, at $6, I'm 70 up. $420. I'm going to buy it right now. I just did at 60, 50, 62, and I put a stop at 49.80. 80 times 6 is $480 is what my risk is right here. Look what you got going for you. You got an ABCD pattern coming in here just a little bit lower. Remember, mathematics. This is mathematics precedes geometry. This is geometry. That was Isaac Newton. What's his name? Albert Einstein. He said mathematics precedes geometry. So there's the geometry. That's the ABCD. There's your mathematics. It's 382, and we're right there right now. 55, that has been the low, so somebody must have seen that earlier. That's a joke, boys and girls. Anyway, that's what I'd be doing. And by golly, if you can't do that one, you can't do any of them. All right, let's take a break. We got Quality Web in the house. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have in the house PT Webb. Paula, how are you?
Good. How are you?
I am very good. What are you seeing today to tell us? Give us some good news.
Well, hey, the markets are at all-time highs. What more do I need to say?
Not much.
No, I mean, I think we're just we're going to have some good volatility and some good volume coming up in the next few months. So I think everybody better be prepared mentally and emotionally to take advantage of it.
How do you get someone to prepare for something like that? I mean, I prepare myself every day, but sometimes it's not the preparation that gets me. The fact is, I put some bad orders in. I'm always used to doing that, but how do you prepare someone's? Like I'm looking at Armageddon actually, and I don't know if it's going to happen or not, but it looks pretty bad from my perspective of looking at it for a couple of years. But how do you really, that's my biggest problem is, I've got a mindset that, boy, this looks really bad, and yet it keeps going up. And so I just nibble at it here and there, but that's what I have to do. I nibble. I don't take big bites and take big losses. I'm not going to do that.
Well, yeah, I mean, and that's a good strategy. I mean, those little nibbles add up in profit.
They sure do.
I mean, and so that's one of the things that I teach traders is that it doesn't matter how small the profit taking is because it adds up. So, you can't really be concerned about the dollar amount as long as you're taking consistent profit because that will expand just naturally, exponentially the more comfortable you feel. And right now, hey, none of us are 100% comfortable like we have been in the past, just due to current events. So we just have to do what we can do and not beat ourselves up for not taking more or hanging on longer or getting in sooner. I mean, that's counterproductive, as we all know. So it's just a matter of trust your gut. Your gut's going to say, get out. And it doesn't matter if you think it's because you have fear or fear of loss or whatever. The point is, your gut is always going to tell you, your instinct is always going to tell you that, okay, take your profit, wait for the next setup. It's that simple. It really can be that simple. And you know this, Larry, because you're a great trader. That's what we refer people to.
Some days I'm better than others.
Well,
the one thing that I do is I focus on the ABCDs, and I try not to listen to the news. And I know it's difficult because the news is everywhere and everybody's saying something. But if I get back to what I know best is AB equals CD, that's really all I really know, and I stick with that. I'm okay. I can remember the 6 years that Mark and I worked side by side there in Phoenix or in Tucson when we lived together. Every day he would come in and say, "Good morning, AB equals CD," with that little slur that he would joke with me about. But by golly, he used it too, and I used it. And I said, why don't more people use it? And he says, it's too easy. And I said, yeah, that's probably right, because I don't look at news. I just look at ABCDs, and when they fit right, they work, and when they don't fit right, they don't work. That's bottom line.
Well, and that's a good point you brought up, Larry, because a lot of traders think it has to be difficult, and it doesn't. You can have the AB equals CD routine or methodology, and that can work just fine, and there's nothing wrong with that. But trader after trader that I coach, they say, well, it can't be that easy. I'm like, yeah, it can, if you think it is. I mean, I'm a mechanical trader, as you know, and that's what works for me. I put on my trades, I put in my stops, and that's it. I let the trades do their job, or not, whatever. But I've limited my loss because I have in my stops. So that's very simple. That's probably the most simple across the board, but that's what works for me. I found out a long time ago what didn't work for me. And so this works. It's simple. It's easy. I don't have to rack my brain. And so I use it.
Mm-hmm. Yeah, people think that I sit in front of the TV or the monitor every day looking, folks. I'm only in front of the monitor this 1 hour here and probably 2 hours for the rest of the day. So the 6 hour trading day, I'm only looking at it probably 2 or 3 hours, and not all the time. I have beepers on to tell me when price alerts are hit and an order is filled or we're right at an area where I want to act. But other than that, looking at the machine is absolutely the kiss of death. Do you remember back years ago, Gosh, what's the guy's name down in New Orleans? In mind, you know as well as I do. I can't.
Tim Slater.
Tim Slater started all this, folks, where we get all these charts like this way back in the early 80s with Mark and Walt Bresser and a whole bunch of other guys, that we were going to get this kind of material here. The worst thing they ever did in those days is and Mark always said this, is they put the exact amount of money that you have in your account to the penny every second. And Mark said, boy, if that's not the kiss of death for most people, that's it. Because what do they do? They're focusing on that little clicking going up and down. When it's going up, you're feeling great. When it's going down, you're feeling bad. You shouldn't have that problem. You should not even look at the money. You should just look at what the trade is doing when it hits those levels. And the rest of it, no one really cares whether you're in it or not. It doesn't make any difference. So we'll see.
My teachings, as I tell traders, you have to know where you're at financially at any given moment, up here, not flashing at you on your screen. So I agree with you about that point.
How about the book? How's it coming along? We're almost ready?
Well, okay, as you know, I moved last week. And so today is only the second day I'm back at work. So I'm going to say the end of September, and I know I keep delaying it, but this move came up unexpectedly, as you know. So, but it's going to get there, and everything happens the way it's supposed to. So just bear with me, but it'll definitely be out by the end of the month.
That sounds fair enough. Listen, we're going to have you on again next week too, so have something good for us again, okay?
Okay, sure will.
Tell the folks how they can reach you, PT.
PauliTWeb.com. 760-636-4290 and 442-256-0548. That's the cell number for critical moments if you just need to talk to me right away. But try not to do it at 3 o'clock in the morning.
3 o'clock is not a very good time, that's for sure. Thanks, PT, for joining us, dear. We'll have you on again soon,
anytime,
okay?
Larry.
Okay, hold on, folks. We'll get the charts up here in just a second. Only takes me a second here. We want to take a look at our per animal that we've just unleashed here, which is the soybean oil. We'll get this up here. We're buying that at I actually bought it at 61. It's trading at 60 right now. The stop will be at 49.80, and this is about as good as I can get it, So remember, this is only the second ABCD that we've had here since this whole thing started. So that means quite a bit, I would think. So we'll see. Stay tuned. We'll talk about this in the eyes of the soybean meal and also the soybeans themselves when we come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is November beans. These are new beans that are being grown right now. This is the growing critical part from August to the end of August. You can see that was the critical area. Looked like it was going to be something bad, then it backed off. Now, all it can do as far as crop is if a crop comes in slow and they can't get it out of the field in time, or it gets cold and a frost comes, then that could make them move up. But right now, that bean crop is pretty much made. They know how many bushels are coming in and what the demand is and everything. So that's a negative. The only positive, the weather does change and you get an early freeze or something, this thing will skyrocket. But that's what you have to deal with. You don't have anything that you can do to actually mitigate any of the losses that you might have, but all you can do is put your stop in and see what's happening. So you had a bottom here, you've gone nowhere for 3 days. That's not a good sign. And so that's holding up relatively well. If we look at the meal, and that's one we've liked and hasn't done very much at all. Let's get this up here and we'll take a look at it. Remember, we're in the oil now. That's a totally different ball game than these others. So hold on, meal, where are you? Soybean meal, here's where we are. Get the daily up here in this meal, and then we'll be ready to go. We went down there, and fact is, we tried that down here. If you remember, we lost $3. We bought it there, lost $3. It did come down to this last support area. Let's clean this out because it's got the wrong numbers in there because of the higher move. We went from the high down to the low. We came down to the 61% retracement again. Now we've had a pretty good rally here. You can see the meal is actually pretty good. Well, it's not doing that good because all we've done, I think, is about make a 382 off of that last run. And that's pretty much what we've done today. So it hasn't really done much there. Now we're in the oil. The oil has a lot of uses, folks. This is the reason why Henry Ford went to China and figured out how soybeans worked, and they needed oil to make paint so his cars would not always be black. And by golly, that's why they're not black to this day. Anyway, that's what we're watching. We're in the oil at 51.60, and we're going to see whether it works or not as we go through here, looking at this the rest of the day. And that's pretty much, well, we're at 61.55 now, so we're right back at the exact 382 right now. So we're going to find out if that's going to be it. I bought it at 50.61 and I put my stop at 49.80. So right now I'm losing $30, $66 a penny. 5 times 6 is $30 down. So that's what I'm watching as we're watching this thing here unfold here today. Okay, now someone's asked a question about the Japanese yen. Let's get this up here. That has a lot of influence on all these financial markets. And here's where we are. Should be down to some pretty good support here. There was our 382 the other day, and all we've done today here is We've had a little bit of a pullback. We missed the 382 here by just a heartbeat, folks, so didn't quite make that. And now we've come down, and we made a low here. We matched this low right here, almost. We didn't quite do much. So the first thing I would do, we've been here for so long, that's a pretty good sign. Now, if this is only, let's just see if this is only a 382. This could be a good sign for the Japanese yen, the dollar getting ready to move against the yen. Let's put this up here. And there's your 382 came in right here. So we've been below it, but each time we've been below it, it popped above it, even again today. So that's telling us that there's some pretty good support right in here. So that, and now look at this. This has taken a whole month to make this support. This is just like it did here. I'd be looking to be a buyer here of the yen, dollar yen. Now, this is a day. Now, we've had a pretty good run. Let's look at our 382 if it have helped us today. Put the 4-minute up. Oh, no, it's not going to. I got to refresh this first, folks. Hold on just a second. Hopefully that'll refresh. There it goes. Yeah, here's your refresh. And I would have been looking to buy a 382 on this after this run. And that would have come in, it would have come in right here. And that would have gone below it by 40. You bought the 382 at 74. 50. You wouldn't have got stopped out because even that's only $300. But this is a report. When the report came out, pushed it down and then back up. By the time you put the order in, if you had your stop here, you would have got filled. If you put your stop here, you wouldn't have got filled. But that's not a lot of money. 74, that's only 26 pips. That's 30 pips. Even that is only $300. So your stop would have to be below this level here. And then now you can see it's starting to go higher. You can't trade this thing for $22 or $300. You got to put your stop at least outside the range of these things, especially when there's a report out there, folks. And there's smaller patterns in here, but they're hard to trade. But that tells us that we've been here for a month, and that means that we're getting ready to probably have a pretty good run. So watch this again for another pullback, and I think it'd be something you might want to pay attention to. Okay? All right, we've got another one here that is jumping around. We got the Dow Jones just made a new high on the day because... that's the bonds. The bonds are rallying back to this level right here. Let's get the Dow Jones up here because I just saw it jumping, making a new high on the day. That's why I wanted to bring it up to show you because that's, you know what, United Healthcare. That's what's doing it all. So there it is right now. We've come back. We pulled back to a 61% retracement here. And remember, this is only a couple of stocks, but that's what we're watching. So here's where we are. Oh, dear. We're going to be right up here knocking on heaven's door in just a second, folks. There it is right there. There's your AB leg. There's your CD leg right here. So that's going to take us 45839. Boy, that's up another 80 points in the Dow. So watch this number right here, folks. And I think that would match the old high, September 5th. And also way back here to that one there, 158. Oh, we're going to hit it up here about the third or fourth time. So there it is right there. There's that number, 45838, 45851. That's the number. That is 80 pips from where we are right now. AB equals CD. And you look at this on the daily, you're going to see that it does make a new high by just a tad. And that's okay because it's only being done by, you know what? Just a few of these little puppies. And that's why you want to be watching it up there. 45855 is the exact number. Let's put that, I think that's what the number was. Just got it right here. Yeah, 45851. That's the number you want to be watching. We're 45758. We've taken out a new high. That matches the ABCD number that we were looking at eventually. See, that was from the previous day. So we've definitely completed that, but we could still make that one. But remember, again, you're only dealing with a few stocks. And remember, we talked about United Healthcare, and we've got Warren in there, and he's got to get his cash going. Look at this thing, just keeps going higher. Let's look at it intraday. You'll see it's just been a one-way Corrigan the whole day. So that's why it's hard to fade that, because it just keeps going up and up and up and up. So we only had one tiny little pullback here of a few bucks. So that's Warren in action, folks. He doesn't tell you he bought it here. He tells you he bought it there. Very smart, don't you think? I do that, and the market goes against me. Shut the front door and raise the rent. Boy, they're not treating me right sometimes. But most of the time, I'm okay. I don't complain too much. I complain a lot, but no one listens to me. Well, a few people do because they complain. Anyway, that's what we're watching here with this market here today. Let's get clean this up just a second here, window tile vertical. And we'll be back in just a few minutes and I'll wrap it up.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Russell, and as you can see, it's just making a 382 on the day right now, as opposed to the Dow Jones, which got just a few stocks that are making a move. This is 2,000 stocks, so this is the weaker of the group. So you always want to sell the weakest, as the old cheetah goes after the weakest in the jungle. So should we. So that's the weakest, and your stock would have to be up about 10 points. You have to risk that much because they're pretty active in these markets anyway right now. So that's been the weakest, and that's what we're looking at this unfolding today. And I just mentioned I'm going to talk about this one more time because it's such an important number from my perspective, and that is this Dow Jones number, because it's happening just as we anticipate that it might. And there's a number right there, 45851, and we're about 90 points away, which is not very much. You can see we've just made a new high on the day of the Dow Jones, which was the exact target that we were looking at before, 45755. So I'm looking at this larger target that we have in here. Now, we might go above that, making it a new high, and they'll be yelling and screaming about it. But that's only because of a couple of stocks, mainly United Healthcare, because it's selling for $300 and some bucks, and it's up $20. That's not an easy one to figure out. So there's what we're watching here as we're watching this here unfold. No matter what, we're going to have great volatility in these markets, folks. And that's the key to what we're watching here, is to try to, capitalize on it by using simple things like ABCD, tiny little risk control, a little bit of common sense, well, a whole lot of common sense, but mainly just worrying about the backside, not how much money you can make, how much money you can lose. And that's what the key to this whole thing is all about, is focusing on that. So live every day in an attitude of gratitude, and may God bless. And we'll see you all tomorrow. And I believe our guest tomorrow is going to be, as I recall, Bill Cerubi, possibly out of Vienna, Austria. And then on Friday, I believe we're going to have Shane Smolian on. So let's stay tuned, and we'll see you on the flip side, boys and girls.